Welcome to CEO. I'm Michael Yorba. Thanks for joining us. I've got Christian Kameir, Managing Partner of Sustany Capital with us today. Christian, welcome to the show.
Thank you, Michael, for having me.
Before we get into the list of questions I have for you, give us some background on yourself and your company.
Sure. I was a software developer in the mid-'80s. Did an internship back at Siemens Nixdorf doing the day programming basic, right? And I made the unfortunate decision to get a law degree instead of continuing computer science. Became general counsel for a fast-growing internet service provider, and we sold the company 6 weeks before NASDAQ hit its all-time high at the beginning of 2000. So at that point in time, I stopped being a lawyer, became a VC, moved to Southern California. Did a couple of startups. Initially, we invested mostly into voice over IP technology, multi-massive online player games. So that was actually the first time I was exposed to virtual currencies. So in 2000, that was during the day when we had an exchange rate from EverQuest to the US dollar already. So about 18 years ago. Fast forward, after selling the last company in 2008, I started writing a thesis paper on the idea of creating a distributed World Wide Web because, in my personal opinion, we never ended up building the World Wide Web. We built the commercial web. And this is something that really bothered me. So came across the Bitcoin white paper pretty early on, and then about 2-3 years ago started to run initial coin offerings for a couple of projects as an operator, and met my business partner at the beginning of the year who has been trading in the space, original allocator to the Ethereum ICO. And we created this fund with the idea to get other funds into the business. So we built a large team around us, analysts, data scientists, etc. And so we'll be offering the first fund for institutional investors at the end of the year.
Brilliant. Tell me about the advice you have for people who are thinking about investing in Bitcoin or in the blockchain space, excuse me.
So yeah, we are very much technology investors. So we focus on the actual technology. As such, we apply all the typical due diligence procedures that you would apply to any startup and then to technology in specific. So we look at the team, the technology that they build, if they have an MVP, etc. Because we are not speculators, right? So we're looking at the team and technology in terms of what it can do long term, what it's going to be in 5-10 years from now. So in that sense, we're a little different probably than your speculator who just wants to see that particular project being listed on an exchange. So we spend a lot of time in every project, and with every project that we invest in, we have large allocations in all the larger protocols. We work with application developers that build on top of those protocols, and also trying to understand how those entities work together. At this point in time, it's still very, very early on. If you look at Ethereum and EOS in particular, these are very much in their, at best, alpha beta stages, right? A lot of stuff is still not working on there, and a lot of ideas that are being proposed are still not at the right time. And at the end of the day, investing is all about timing, right? So you got to know when to get in, you got to know when to get out. And like the saying in venture always is, you don't want to invest into the first social media network, you want to invest into the last. And so that's very much the approach that we are taking. It's a holistic approach, looking at the entire space, first of all, to understand where it is. And so it's, in our opinion, very much at its infrastructure stage. There's a lot of infrastructure that still needs to be built, and so there's very few things working. If you look at the space right now, what are the applications that are working, right? So the one major application that you can see is pretty much the ICO, right? The ERC20 application on top of Ethereum is working well in the sense that there's a lot of projects building new tokens, but at the same time, there's very few real software that's being developed that has widespread adoption. So that's the next stage that we are waiting for. So anybody that's approaching us with an idea of building an application, they actually need to first understand where the protocols are, where the underlying infrastructure and new operating systems are. And we find this mostly lacking at this point in time. So the first thing that we do is, okay, what blockchain are you building on if you're not building a new blockchain, and why did you pick this blockchain? Explain the basic fundamentals of that blockchain and then how your application works on top of that. And you will find there's a lot of still education that's needed there.
It seems to me that this industry sector is moving so fast, it's hard to stay on top of the latest code that's going into blockchain. I've had several people on our show that have broken through the envelope, and next thing you know, instead of 7 seconds to make a transaction in Bitcoin through blockchain, now it's almost milliseconds, and it's from one to the other. It's hard to keep pace of that. So how do you stay on top of what, because you said you don't want to invest in the first one, you want to invest in the last one. The last one, I mean, that could be like 10 years from now, the last one on this.
Yeah, so we have been in the space for quite some time. So we built the local groups here. We have about 1,600 members in our local meetup groups. So we are staying in direct contact with the actual developers. That's most important to us. Like right after this interview, I'm driving up to Los Angeles to meet with one of our projects up there. And it's one of the largest projects that's happening on EOS. So we like to understand where their challenges are specifically if they're building something on top of that. And so that's really the only way to stay on top of this, because most of the reporting that you'll find online is agenda driven, right? You'll see a certain interest group pushing certain ideas, and 99% of the time it's simply incorrect, because the people that are actually developing something in the space, they don't attend most events, right? They don't bother publishing anything in the most read media. You'll find them in small meetup groups discussing technical details, and this is what's actually moving the needle at this point in time. It's the time of the technologists, right? And so what you'll see in the market that right now you got like 1,700 coins listed. Most of these will wash out over the next 6 months, but we'll talk about that, I guess.
So you have people that can come to you for advice of saying, which one of the companies that I'm looking at may not be what I think they are. Is that a service that you provide for people who have money to invest in this sector?
Yeah, so we get pitched about 100 times a month. And so a lot of these projects that come to us, they have things missing. And even if we don't invest into them, we get back to them with feedback. So we developed a very detailed intake form. As I mentioned, we have analysts and data scientists on our team that do deep due diligence on those. We like to see this ecosystem being developed. So we want to provide feedback and education. So and once in a while, what we do is we'll quote unquote underwrite an initial coin offering if we think this project overall makes sense, but it's missing some ingredients that they haven't seen in the space so far because they just didn't have the right advisors at this point in time. And a lot of the circumstances in the United States, as you know, are somewhat misguided, and you need to kind of take a holistic approach to that and know what's happening internationally. So one big example, something that we have been researching quite a bit over the past 3 months, is this whole idea of identity management on the blockchain. And you will find that most of the actual potentially viable projects in that space are being driven from Europe because they got GDPR, the General Data Protection Right, empowered the consumers back in May now to own their identity, so it has immediate applications there. And a lot of people in this country are maybe vaguely aware, but in those particular circumstances, these people have been working towards that particular solutions for a decade. Right after I got out of law school, I used to teach privacy rights. So when I came here, I noticed, privacy is totally handled different here. A lot of the things that companies are allowed to do here, like the Equifax and Experience of the world, would be entirely illegal where I am from. You couldn't do that. But now it's gotten a step further where the General Data Protection Rights Act enables a consumer to own their identity to a degree that has never been seen before, but it applies to every company around the planet. So if you're looking at certain projects over here that have not been exposed early to this particular topic, they have a lot of catching up to do. So you need to know these things in order to build a useful application. So what we do in these cases, we reach out to everybody who has a larger interest, i.e. we talk to the United Nations, we talk to ID 2020, we talk to those people that have a huge interest in bringing 1.1 billion people without an identity onto a platform that's secure and safe, such as one powered by the blockchain. So you can see that once these particular entities have a useful application, you can see that this application will spread throughout the world, because it then protects you also from identity theft further down the line. It also enables you to then develop a wallet application that's secure and transmits only the information you need to do a transaction. So if you understand those pieces of the puzzle, you can actually build an application that might have a future on top of the blockchain. But what we see most of the time is a project will approach us and they simply thought, well, we can now do this on the blockchain, and whatever the application is, they do not look around to see what other applications have been developed so far. So in that particular case, if we see something has merits, we'll take it on, we'll underwrite it, and help them through the process of tokenization. Otherwise, we'll just get back to them and tell them, okay, these are the 50 points we would like to see, and you're missing these 15. You can always come back to us at the time when this might be interesting, and or we'll just tell them, okay, the application just doesn't make sense. Understand how much transaction cost on Ethereum right now, understand how long they take, which last year I'd say the majority, more than 50% of the projects that were pitching and oftentimes on stage, they didn't understand those basic fundamentals of the blockchain. They were just assuming that transactions are instantaneous and are free. And a lot of times you find lawyers and consultants that also don't have those basic fundamental understanding. So this is a particular scenario where you need a project manager who has a little bit of knowledge of law, of computing, of business intelligence, etc. And you very seldom find this. And so if you just comprise a team of experts in all those different areas, most often you'll find that they are not designed according to new blockchain standards, if you will.
Right.
And the other thing that we'll find most often is, and this is starting to end now though, is that the first project approached a law firm in the United States and they sold them a certain recipe because there were no guidelines, right? And then the law firm will sell the second project the exact same recipe because now they have to. And that was a very unfortunate scenario, not only in the United States, but all around the world. So we used to promote initially the Swiss model, right? So that essentially the way that Ethereum entered the market space, where we made a donation to the Ethereum Foundation and got tokens back. Actually, back then, we didn't have the expectation we would get something back of value. It was really a donation to that foundation. Obviously, now you can't apply that same model because if you're claiming now you're a foundation, you're giving something out as a token, of course the other person expects something back and expects this token to rise. So circumstances, like you said, change, right? And they change rapidly.
Got it. What advice, and I can see that you're on top of it, and I'm glad that you took the time to explain all of the diverse, not only concepts that people have to be aware of, but actually the practical application, whether it's an accounting, it's a coder, or it's a lawyer, or it's somebody that's got plain business sense to it to see whether it's scalable or not. Let's change gears for just a second.
Sure.
What advice do you have for teams that want to conduct an ICO? There's a lot of that going on right now, and I think that there's a lot of confusion out there about what it really is and how it really works, similar to when crowdfunding first got started. The effectiveness of what you have to do on your side to make it successful.
Right. So I give 2-hour talks on that. So let me try to wrap this up in about 5 minutes. So what I always say is work your way backwards from the end goal. And so if the end goal is to get your token listed on an exchange, you should know what these exchanges require. And they're very open about this. So you can go to GDEX, download a PDF file that would tell you, hey, to submit your token, you need to provide these 20 things. You need to have a product, you need to have a certain token economy, etc., whatever it is. And it also changes from month to month, right? So the requirements become higher. And then if you take the US market in particular, they are very, very picky in terms of what token they list. That's why GDEX, for example, or now it's Coinbase Pro, only lists a handful of token, because by definition, they won't list anything that smells and looks like a security. And that's very particular to the US markets, but also holds true for some of the other exchanges around the world. So knowing that, start from there and work your way backwards. Then there's more practical issues to consider. So if you want to go the quote-unquote crowdfunding round, a lot of times these people obviously only raise Ether and or Bitcoin or maybe also some other cryptocurrencies. Hey, at the end of the day, there's a 90% chance that your project will need still, at this point in time, some fiat currencies to, let's say, pay your employees or pay your landlord, etc. And so that's a real practical challenge right now. There's very few banks that will work with you if you're in the cryptocurrency space. They are just a little more than a handful, and some of them are backlogged to the extent that they won't take on new clients for another 6 weeks from now. And then also they want to see certain proofs of the clients that you take on, right? And so I always start there and tell them, okay, what is your final goal? Where you need to be in 6, 7, 8, 9 months from now in practical terms. Okay, and then you go backwards, right? You start there and say, okay, I first need to have an entity that will then issue the token. At this point in time, we would advise you not to create an entity for that particular purpose in the United States, because it's still very uncertain how the regulators will treat these particular entities.
Are there preferred countries that you would direct them to at this stage of the game?
Yeah, all the usual suspects that you probably already have heard of. It's Malta, Gibraltar, the Cayman Islands, etc. It also depends on your particular scenario, because it's a holistic approach. We work with all the large accountancies out there when we get involved in these type of projects, and also make sure that the tax situation is covered, right? So you want to find the right mixture between the right entities to set up. We are very comfortable setting something up in offshore havens that have been working for this particular purpose for decades at this point in time, and you got all the large accountancies and law firms that help you out at this point in time. And you make this your token issue, and then you just need to make sure that you have the intercompany agreements right? I mean, it's a little bit dangerous what the regulators in the United States are doing to make all these noises, because what's happening is simply people will just avoid this legislation to the detriment of the US entirely, the US economy, and potential investors and potential projects that want to go in the space. We've seen the better projects move, right? We see them move to this little town in Switzerland, Zug. That's, by the way, the right pronunciation, not Zug. And to Malta and Gibraltar and other countries where there's more certainty to be had. Because it's the same when you started taxing large international corporations, right? You saw that these corporations all of a sudden are paying most of their taxes in Ireland, right? Even though their headquarters are presumably in the Bay Area, right? So that's all you're doing. You're really squeezing those projects out of your jurisdiction. But back to your original question. So we have a very detailed checklist that we apply, that we started about 3 years ago, that we run through with the projects. And what we like to see on our end, for the most part, is actually working products. Because, as I said, we're technology investors. We don't speculate. We want to see those projects come through and actually build something over the next 3-5 years, but we need to see an MVP of sorts in order for us to get engaged, unless, which is something that's a little newer, it's an existing company. Because to me, that's actually the low-hanging fruit, where you have an existing company that has a business model, has a client base that wants to apply the blockchain to the existing business. And there's lots of low-hanging fruits to be had. I mean, before you get disrupted, you want to ideally disrupt yourself. And
let me ask another question.
Sure.
What about companies like ours? I mean, I had an IT person set up a crypto wallet for me. I'm not a coder myself. Right. And I need to be able to take, like you said earlier, I've got to be able to take some of the crypto in their currency. Maybe it's Ethereum, or maybe if the bill is large enough, say Bitcoin, and then convert some of that into, if I can, a merchant account that goes through a bank that can end up allowing me to use to pay the employees or the bills that come in, which only accept US dollars.
Right.
So I heard that Fidelity is the only bank in the United States, Bank of America definitely won't do it right yet, that you can actually connect a merchant account to actually finish the transaction in fiat currency to use until everything can be, and there are more vendors that will accept crypto. I want to stay ahead of the curve, but what advice do you have for people like me who have set up a wallet but can't seem to find a bank to turn it into fiat currency without going through an exchange first, making the conversion, and then try and get it through your merchant account so it can be registered on the books and then used as a basis for this is your revenue?
Right. I mean, the best idea for right now is to hodl and then take a loan against crypto. So there's several entities now that work with large banks, and one announcement will be coming soon from one of the companies that you mentioned, where you can just hold all of your crypto in that particular wallet and loan against it, and loan fiat against it. That will be my advice. That's what I'm doing.
Okay, I got that. All right, blockchain technology. I would like to get your opinion on how you see this going forward and affecting micro and macro economies.
So microeconomies, well, let's start with macro. So, and blockchain are honestly more important right now to the developing nations than they are to the developed nations, right? So a lot of developing nations don't have a financial infrastructure to speak of, right? You've got a lot of people that don't have an identity, so they can't get a bank account. Once they have an identity, the likelihood is they're now going to start with a digital wallet. They won't set foot into a bank ever. Just like in sub-Saharan Africa, people entirely leapfrogged the wired telecommunication system and went straight to smartphones. They're going to leapfrog our traditional banking infrastructure and leapfrog right into a digital currency of sorts, right? So that's kind of one interesting, if you want to say, global perspective of blockchain immediate implementations, because there's an actual immediate need. And like I mentioned earlier, there's projects from the United Nations that are working hard to get those people that A, don't have an identity, and then B, as a consequence, don't actually have any financial instrument into that ecosystem. That's more than 1 billion people worldwide. And that's a lot of people to bring in, but will subsequently then have an effect to people in the developed nations, right? So once you see people in the developing nations having more efficient banking infrastructure than we here, where we're still waiting 2-3 days for funds to be settled, you're thinking to yourself, okay, in sub-Saharan Africa, 56% of GDP in Kenya is now being moved through a virtual currency. Why do we still pay for the privilege here to lend the money to a bank for a couple of days before it shows up into a different account? So those are kind of the immediate and global implementations that I think you'll see. And so first of all, you will see this whole theme of money over IP, kind of like where we had voice over IP being adopted by telecommunication companies. Much sooner after Skype was out, they realized, okay, people, like we talk for free right now, right? And this would have been a long distance call some 20 years ago. We would pay $1.50 per minute, and it was international even more. So the same paradigm works for money over IP. So Bitcoin was in a way the first implementation of money over IP. So I expect in the next couple of months, if not maybe within the next year, the large financial institutions that are smarter to apply this to their own quote-unquote backbones, specifically for international money transfer, which is very expensive and very slow. Mm-hmm. So you'll see that on a global scale. And then when it comes down to other macroeconomics, I think the most underestimated paradigm shift that the blockchain provides is that of autonomous, decentralized organizations. So specifically, Bitcoin itself was the first decentralized autonomous organization. So there is no Bitcoin corporation, obviously, as you know. So there's no rent-seeking entity that is taking money or any other value out of the ecosystem. So there's other platforms now, like Aragon or like the FieldDAO project, where you can create an entity that's not for profit, particularly, but puts the purpose first. And the typical example for this that I always like to cite is, like right now, you've got large centralized for-profit corporations that are basically just rent-seeking. What I mean by that is you have things like a search engine that's actually an advertising company, right? So you use it as a search engine, but what Google or any of the other search engines for that matter do is that they harvest your data to sell it to advertisers. That's their business model. So that makes it very, very difficult to provide you as the quote-unquote user with a better search experience if that's the business model, because my business model is depending on you clicking on advertising. So I want to push this in front of you as much as possible. On the other hand, if I have a decentralized autonomous organization where anybody that's using search can simply own a couple of that token and then reward people that provide better results with tokens on that particular entity, your search result will get better and better. And this still doesn't mean that you cannot have a for-profit motive, but it's secondary to the actual objective of that particular organization. And this is just one example. This example works on a lot of different organizations out there, specifically if you're competing with something that's rent-seeking in nature. If you look at all the large, what we call the sharing economy implementations, such as Uber and Airbnb, they're highly decentralized, right? So they're highly centralized, excuse me. Right. And so they're taking an enormous amount of profit out of the ecosystem, and the ecosystem itself is inherently peer-to-peer in nature, right? You are renting a room for someone else. You are getting directly into a car of someone else, and you've got an entity in between that's trying to make a few dollars out of that, right? So if you take the current valuation, I think the last valuation of Uber was something like $56 billion. If you could decentralize that value and just shell it out to the actual provider of that service by them owning the service, and then you have an entity attached, that actually makes the service better and better. Everybody in that ecosystem is better off because all their motives are aligned. And that's the great innovation really that blockchain provided. It allows you to align the motives of everybody involved in this particular marketplace.
It makes me think as an investor that the underdeveloped countries are going to be great opportunities, provided you know where to put your money, more so than they ever have been in the past when they start adopting blockchain and the transactions in cryptocurrencies because of the economies and the new type of business applications that are going to be available. Would that be a good way to connect the dots on this?
Absolutely. We are paying very close attention to the developments in the developing nations because you've probably heard of the example of M-Pesa, right? So M-Pesa is this currency that just lives on phones where people in sub-Saharan Africa simply walk into, is it Orange? It's one of the largest phone service providers, doesn't matter, paying cash and then trade minutes. Right? So they don't have any paper currency at this point in time. They never had one. They never had a bank account. And so you'll see that all this infrastructure that we built here is really what we call technology debt at this point in time in the developing nations. So you will see that these will spread much faster and further in the developing nations because they don't have any of that technology debt. At the same time, they obviously have the need to transact and transact in real time. And so that's why you should look at those markets first before you look at markets like here where people are trying to build yet another social platform. That's a nice to have, right? This is not a needed implementation. For people in the developing nations, that's needed. It's required. I need an ID, right? I'm a refugee. I need an ID, and I need to have a method to get my money safely over a border. It's not an option. Same with countries that have devalued an inflationary currency. So you see in Argentina and other countries, people immediately converting their government-issued currencies into cryptocurrencies because government currency is just losing its value the second it gets into your hands.
Right. I could see that. I at this point, I would like to extend an invitation to come back and have ongoing conversations about the latest developments you see in the myriad of questions that we've had today, because this has been a wonderful learning experience for me. I really appreciate this.
Sure thing. Of course. Anytime.
All right. Thanks for joining with us today. We'll talk to you real soon.
Thank you, Michael.
You're welcome. All right. Thanks for watching CEO Money. Don't forget to follow us on Facebook, like us on Twitter, like us on Facebook and follow us on Twitter, and subscribe to our YouTube channel. We'll be back with more great content for you soon.